What's up, traders? Trav here. In this video, I wanted to talk about something that we don't really talk about that often, which is trade journaling. It's a topic that we probably should be talking about more, because not a lot of traders actually take the time to make notes about their trades and journal their trade. Everybody's more worried about technical analysis and what their entries are like, and then after that, some people are putting in effort in towards risk reward, money management, and their mindset. But then way down the bottom, there's this little thing called trade journaling, which can uncover a lot of unseen issues. So if you're sitting around and you're trading, you're scratching your head as to why you're constantly losing all the time, or you can trade one or two certain coins but not others profitably and you can't figure it out why. Like, the trade journal really helps you to figure that out, because you're capturing data across a number of metrics, and you can go back over time and just see if there are any patterns that evolve. And if you're not making notes, even basic notes, just in a notebook or something, then you've got no way of knowing what's going on, because you should be taking hundreds of trades, and there's no way you could remember exactly what was going on at the time when you were taking it. So journaling is the only way that you're going to be able to do it, and it is laborious and very boring, and it's probably why a lot of people don't do it. But it's just one of those things that you need to do. It's if you're trading seriously, you're taking this as a business, this is just the admin work that you got to do. You got to keep notes of what you're doing and what your results were like, and then review it and see if you can find any way you can squeeze out a couple of extra percent on your edge. You got to always got to be working on your edge. Always got to be better. There's always ways to improve yourself. The trade journal is one of the best tools that can help you, the individual, to figure that out, because only you can figure it out. You are the only person that trades the way you do. Alright, so what you're looking at here is a modified version of the trade journal that I use. It's modified in a way that makes it able to be customized to the individual. So there's some extra fields in here, and then there's lots of these, there's drop down boxes, rather than, my original version is all very centered around how I trade, and not, nobody trades like I do. I'm just like nobody trades how you trade 100% of the time. So I've tried to make this one easy for you to customize and easy for you to track your own metrics without having to know too much about how spreadsheets or Excel and Google Sheets and fancy formulas and that sort of stuff. So not everybody knows that sort of thing. There's some smarts in here that make it a little bit easier. I just want to run through it, give you guys an overview. So at the very least, maybe you could take inspiration from this and create your own. As I said, it's very important. So the things that you want to be tracking, at least I think the things that you want to be tracking at a minimum, are the things that I've got here. So this goes on for a bit. So the first column is the exchange, obviously. Incidentally, all these little cells with the drop down arrows, they're populated here. These values here aren't fixed. You can delete them and add in your own. It doesn't have to be these values, which is the whole part of it being custom to you, the trader. So especially when it comes to things like Confluence, like you may not trade RSI, like you might like MACD. You can just add it into the list, and then it'll pop up down the bottom. But anyway, back to this. So you want to be sure to track what exchange you're trading on, and then what coin pair. So let's say we took a Bitcoin USD trade and we used a EMA cross strategy for this one. So you want to name, if you're trading one or two strategies or however many strategies you're trading, you probably would give them a name. Strategies would have a basic name to it. That way you can go back through all your trades and see how profitable you are using your EMA cross strategy as an example. That's one of the values that is here. I mean, you just add to the list the names that you want. I've just got some generic names here. Your emotions. So I think it's quite underrated how, of course it's obvious when you say it, but your emotions do affect your performance, but people don't talk about it that often, and they certainly don't track it. I've just got a whole bunch of emotions here. Now you might be fairly confident. You could be anxious about this trade. You could be this could be a FOMO trade. You might be a bit worried about it. You could be trading while you're sick. Any sort of emotion that you can think of. It's important to be honest with yourself. How are you feeling right now when you're taking this trade? You could be nervous. That's another one. That's not even there. You can put that in there. Nervous. So let's just say that we are nervous on this one. And you can go back and see whether nerves has anything to do with it. You could go through and all the trades that you felt really confident about when you entered them, and you go back and look at your figures. You might find that those trades are the ones that lost you the most money. And then you think about, why would that be? And you think, well, maybe my confidence was actually overconfidence, and I was blinded to something else. You might be going long, and you're just blinding yourself to all the things that are screaming that you should be shorting. The next column is news. So here you can just type in, what's happening in the land of fundamentals. So, it might be coronavirus stuff, or, Fed cutting rates, or Trump saying something stupid, it could be anything. Your entry time frame. So let's just say we took this one on the daily. The technical analysis trade thesis. So this is where you would say, I'm taking this trade based on these 5. What are the indicators doing? What are the trend lines doing? That sort of stuff. So you want to make notes about it. So I don't know. Let's say we saw a double bottom, and then we had there was a doji there as well. It came back to the 618 fib. It was bouncing off support resistance, and we can just leave it at 4. You don't have to fill them all in. I mean, if there's only 4 things or 3 things or whatever, then fill in what's there. I don't know. Let's just do that. So that's your technical analysis stuff. Your trade plan. So this is where this is before you've even entered. So you've decided what you're going to trade here, and then you do your charting, and then you figure out what the TA is saying, and you're saying that these things are in your favor, so everything's cool, and then you say this is where you put in your stop loss and your entry based on your trading plan. So let's say we are going to be trading Bitcoin. So we've got 8,000. Let's say the stop loss might be at 7,900. Take profit, I don't know, let's say 9,000 just for fun, and we want to risk $1,000 doing it. So between this $100 drop, we're going to risk $1,000. That means we have to have a position size of 80,000. That is a risk reward of 1 to 10. It's a big Hail Mary, this one, but that's fine. So that's your trade plan. So that gives you your position size and your long and what's short. Now, let's say you take the trade. So let's say we took it. Let's say we took it yesterday, and we did it at say 8 a.m. The average entry price. So you planned to enter at 8,000, but let's say, for example, that there wasn't enough liquidity for you to buy at 8,000. Now on Bitcoin, on Binance, that would be unlikely, considering it's only $1,000. But let's say in a different scenario, you might be trading some sort of altcoin and the liquidity is low, so you might end up having to buy a little bit higher than the price that you planned to. And that sort of things is what affects your overall profit at the end. Because if you plan on entering here, but then you get slippage, or there's just not enough liquidity to take up your order, then it eats into your profit. But if you don't write these sorts of things in your journal, you don't know. Let's just say that we entered it, I don't know, just for fun. The amount it was 80,000. Entry notes. Again, these are just comments that you can enter in. We'll just say as planned for now. TradingView snapshot at the time of entry. So on TradingView, up at the top right, there is a picture of a camera in the toolbar, and it says a snapshot, and you can have your chart displayed how you have it, with all your indicators and everything drawn on there, and you click that little camera icon and it will generate for you a web address that is a link to a picture of what the chart looked like at the time. So by putting that web address in here, so something like that, you can enter and you can save it there. So when you're going back and looking and reviewing your trades, you can say, oh, what was I looking at that time? And especially on losers, so you'll be, let's say you're going long and you think everything's awesome, and then you end up losing and you go, why did I lose? And then you go back and have a look at the chart later, you go, oh, of course, because of X, Y, Z. So having that little functionality there that TradingView provides is really handy, because it doesn't, well, number one, doesn't cost you anything, but it also doesn't cost you any hard drive space either, because it all gets saved on TradingView's servers, and those you can just grab them via that web link. So it's handy to have. So that column is what that's designed for. Now the trade management column is a key one, because I don't know about you, but when I am trading, sometimes I am pretty cool with it and I just leave it alone, but other times I'm just watching it every 15 minutes and I'm fussing over it and I'm worried and I'm moving stops around and all that sort of thing. It can affect the outcome of the trade, because sometimes if you are trading not in a good mindset and you start moving your stop around when you shouldn't be, you might get stopped out. So your trade management section is pretty key, I think. So, did you touch the trade at all? Did you move your stop based on your trading plan, or did you move it emotionally because maybe, I don't know, it wicked back down towards your entry and you thought, it's going to take me out, so I want to move the stop to protect my profits. Did you move your take profit? Did you move the stop to break even? Did you widen your stop? That sort of thing. This move to break even one is a good one too, because it's like a lots of traders tend to do that. So if your trade goes into profit by a fair way, they'll move stop into break even, so they have a quote unquote free trade. But what happens a lot of time is that price will come back to the entry and then bounce off it and keep going. So the whales and the market makers know that traders like to do that. So then they know that there'll be liquidity there. So if they push price back towards where your entry is, they might be able to stop you out and get some more liquidity for themselves. So let's just say we did that. The exit date, let's say today at I don't know, let's go 5 o'clock. Let's go 5:15 just for fun. Right, the average exit price, let's say that we won, so let's go 8,000, or let's go 8,000, let's say that we stopped just shy of our take profit price and we sold everything. So that was our entire position size. Exit notes, we manually closed it. That's like a good one. This is the snapshot of the trading view on the exit. So once you close it down, if you've got time, take a snapshot of trading view. You can save it here. In this blue section, lets us know the results of the trade. So we got to win. It ended up being a risk reward of 1 to 9.29. Our plan was 1 to 10, so we missed out on a chunk of profit because we got slippage at the start and we closed earlier than we planned. Raw price gain, so that's 11%. So it went from 8,000 to 8,900 something. We paid $9,400. So we risked. Remember back here, we risked $1,000. So that's got nothing to do with leverage, though, mind you. So this is just your position size. So if you decided to use leverage on that, that's fine. But we risked $1,000 on this trade. We were aiming to get 1 to 10, so max we would have been 10 grand. So we ended up with $9,477 on that win, and the total trade duration was 33 hours and 15 minutes. So it went from the 8th of March at 8 a.m. to the 9th of March at 5:15. So another thing too, this is another good column, this one here. So you might find that as you enter in trades into the journal, that trades that you keep open longer might be more profitable. Trades that you only keep open for an hour or two, and because you get nervous or itchy, you close them down real quick. I don't know, it could be the opposite for you. That's why you have the journal, so it those patterns will start to appear. So this is a lot of raw data. There are tabs down the bottom that summarize a whole bunch of things. So this is just like a general summary type thing. So like wins and losses, your strike rate, average planned risk reward, the actual risk reward that you got, the risk reward on winners, the risk reward on losers, your biggest wins and your biggest losses in terms of risk reward, the average trade duration, winning and losing, what your strike rate and your stats are like on by day of the week, and what your strike rate and everything is like based on the time frame that you entered on. Now, if you're using multi-time frame analysis, which a lot of you guys do, and I do too, like it's important to look across multiple time frames, pick the highest one. Like the journal only has room to put in one time frame. But if you're looking at the daily and the 4 hour and the 1 hour, and you're seeing all good stuff, and they're all in synergy together, just for the journal, pick the highest time frame and chuck that in there. So that's that summary. We got results by exchange. So this one's good because you might find a pattern that maybe there's an exchange that you win more on. There's an exchange that you just lose every single trade that you take. And if that's the case, don't trade on that exchange anymore. I mean, it's been documented a lot that like BitMEX will have bigger wicks on it than say Deribit or Bybit or whatever. Whether that's because of manipulation or because there's more traders and more volume, but who knows? But it is what it is. But if those wicks are affecting you, then you will be able to see it in this report. Results by TA. So this is back at this section. So here you can see a report on what combinations of technical analysis patterns and indicators and stuff work for you the best. So you would see the results here. This is the only one that you have to put in manually. All the rest are already pre-populated, but because there's so many different combinations of TA that you could have, just manually select the ones that you want to track in the order that you have here, and it'll populate. So for the one that we just had, we've got double bottom, then doji. So double bottom, doji, 618 fib, support resistance, support resistance, and RSI. So there's the stats for that. A good rule for this section is to put, when you're putting in the technical analysis stuff, to put it in alphabetical order. So here I did it wrong. This really should be 618 fib. Oh no, I had it right the first time. No, it's late. I'm tired. Anyway, so that's in alphabetical order. I'm just going to copy this. I'm just going to copy that and chuck that there. There we go. In terms of tracking this stuff, it doesn't matter what order this is in. So just have it in alphabetical order. There's no, TA4 isn't any better than TA1. But in terms of this report, you might write down your analysis in a different order. So like this in reverse is the same, but you don't want to have it across two lines because your stats will get split, if that makes sense. Results by coin. So you can figure out which coins you trade the best and the worst. Results by week. Here we go. Week 11 in 2020. This is how we went. Results by emotion, nervousness. Oh, I won. But there's a whole bunch of emotions here. And results by strategy. So the EMA cross strategy in this case has won one trade. But so hopefully you can see the power of trade journaling, and especially using a spreadsheeting software. So like even if you don't have a copy of Excel and maybe you're not a Windows user or whatever, maybe like Mac or whatever, Google Sheets is great. It's free with your Google account. It does everything that you need it to do. It doesn't cost you anything, and you don't have to install any programs. It's all in the browser. So get in and get involved, and rewind this video and see how I've built it together. If you don't know how to do any of this and you're interested in getting a copy of this particular one, this one I am selling copies of. If you are interested, so send me a message and I will hook you up. Alright, that's it. Thanks guys. Talk to you later.